America's student loan debt is greater than car loan debt and credit card debt. College has become wildly expensive for most families.
43 million Americans currently have student debt. On average, they owe more than $47,000. 5.2 million are in default.
Student loan payments have been waived for 6 months, so we'll discuss it after that.
Wait a minute. This doesn't apply to privately held loans or even all federal loans. Hi, I'm Olivia Yarvis, a reporter here at The Daily, and I'm going to walk you through everything you need to know about managing your student loans during the COVID-19 pandemic. The CARES Act covers all loans owned by the Department of Education with a couple of exceptions. These include federal family education loans that are held by private lenders and Perkins loans, which can be held by your university, as well as all privately held loans. Because some student loans are not covered by the CARES Act, meaning they aren't subject to principal and interest payment suspension, the United States Public Interest Research Group released a guide on how to lower student loan payments, and I'm here to walk you through it. First, you can ask for a temporary pause on your accounts. Deferment means you are temporarily postponing your loan payments. Interest does not add up for many types of loans under this plan. Another option is a fancy thing called forbearance. Here, payments are postponed with interest. Any unpaid interest is capitalized. That means it is added to the total sum of money borrowed. This can increase the total amount you owe in the long run. Another option is to switch to a plan with lower payments tied to your actual income. If you have federal student loans, you can try what is called an income-driven repayment program. This program can lead to payments as low as $0 per month. There are 4 different payment plans: the Repay Plan, Pay Plan, IBR Plan, and the ICR Plan. Under these, you would only pay about 10 to 20% of your discretionary income per month. These lower payments last for a full year and then will be adjusted annually after you file your taxes and recertify your income and family size. Or you could consider loan cancellation or forgiveness programs. If you are already in default, meaning you failed to repay a loan by the terms of the promissory note, you may have lost eligibility for federal student loan aid and face legal consequences. Then, these payment plans could be a good option for you. Under a cancellation or forgiveness program, you won't have to pay all of or a portion of your loan. These programs are generally for when you cannot pay your loans because of situations surrounding your job, a permanent disability, the closing of your college, and much more. These strategies deal mainly with federal loans, but your private loan servicer can also help you explore lower-cost options. For example, you may be able to refinance your loans at a lower interest rate. This is a good strategy, considering student loans are projected to be at historically low levels. In order to explore these options, you're first going to have to reach out to your loan servicer. But have no fear, the Public Interest Research Group has tips for this too. You should have all of your necessary financial information on hand when you contact your servicer. This includes your social security number, your loan service login or account number, and the most recent address you filed your taxes at. All of these will be used to verify your most recent reported income. Once you've gathered all of this information, you have to clearly explain your current financial circumstances. First, explain your employment status. Are you unemployed or working reduced hours? Explaining your work situation allows your servicer to come up with an appropriate payment plan. Next, explain any upcoming bills you have and how you're trying to maximize your ability to repay your loans. Keep in mind that your main goal is to paint a picture of your overall budget and economic situation, and if you're entering an income-driven repayment plan, this picture will help your servicer determine what discretionary income you have to pay off your loans. Now that you've learned how to reduce your student loan payments and some tips for contacting your servicer, it's time to reach out. Customer service phone lines may have long wait times, or physical call centers could be closed because of COVID-19, so try to reach out to online customer service or refer to the Department of Education's FAQ first.